What's up? What's up? GM. How's everyone doing? For all my American friends out there, how was the long weekend? Get into the chat. Hope you guys enjoyed the long weekend in the US. I guess you guys get like a little bit of a extended long weekend here because you have the USA-Belgium game coming up in the World Cup tonight. So kind of feels like still got that weekend energy. Who's watching the World Cup? Who's everyone cheering for? I'm a Canadian living in Argentina, so I was cheering for Canada, also cheering for Argentina. They're strong favorites. It hasn't looked like they've been playing as well as they were 4 years ago in the World Cup, but I don't know. Let's see. They're still my favorites to win. I'm just going to get into it. There's so much news right now. Crazy weekend. And kicking off the Monday in a very strong way here with Michael Saylor. Let me pull this up. The big news that just came out like an hour ago, it looks like. Strategy has sold another 3,588 Bitcoin for $216 million. I don't understand what Michael Saylor is thinking here. This is the worst strategy. Pardon the pun. The worst strategy I could think of. Like for a guy who at least is like trying to be very smart on the financial engineering front. Like he is going about this all wrong. I don't understand. Makes no sense what he's trying to accomplish here. Like just to like give a little bit of like background here. So Michael Saylor is in a pickle. He has now these STRC and all these different securities that he has to pay dividends on now. I guess the big one is STRC, which is right now earning 12% annually. And so he has that dividend commitment to these preferred shareholders. And basically he has no choice because we're in a pretty bad bear market right now. He either has to sell master stock or he has to sell Bitcoins in order to cover these dividends. So he's doing both. What he should have done to just like stop all this madness ahead of time. So like a few weeks ago, he did this like kind of test sell. I think that's what he's calling it, like where he sold like 32 Bitcoin or something like that. Just like a very small amount of Bitcoin, which did nothing to the market at the time that he sold it. But then the announcement was just created this massive knock-on effect where everyone is just trying to front run his selling now. This in the master stock and in Bitcoin. And now he did another small, I mean, it's a lot of money, $260 million, but as far as like the amount of his holdings, it's a pretty small amount. What he should have done is, if he wanted just all of this drama to go away, which everyone in the industry wants all this drama to go away, he should have just sold like $3 billion worth of Bitcoin before he did that 32 Bitcoin test sell. If you like, most people don't realize this, but Bitcoin trades on average right now in this market, it's trading like $24 billion a day in volume, changes hands every single day. $24 billion of Bitcoin changes hands every single day. It's a very liquid asset. Like he would have no problem if he wanted to do a $3 billion sell. You just TWAP, like time weight average price that out over like a week. This OTC desks do this stuff all the time, can easily handle something like this. It would have like very little market impact if you average that out over like a 7-day sell. And then he could have announced that, like, okay, I've got, he already had, like, because of his master sells, $2 billion worth of USD reserves. So if he sold another $3 billion worth of Bitcoin, still a very small amount compared to it, like his total holdings, and would have had very little market impact if you TWAP that over over a week. And he would have announced that instead of all this overhang. Then he would have had like 4 or 5 years worth of dividend coverage, enough to like to wait it out over any sort of bear market. That would have gave the market a lot of confidence that like, okay, this drama is kind of behind us, at least for this cycle. He can pay the dividend and we just wait for the next bull market to come, and there's no more BTC selling ahead of us or master selling. That would have been the smart thing to do. I think a lot of people in the industry would agree with that, but what he chose to do instead is just leave this uncertainty and overhang, where last week, I think he announced that he's authorized, or strategy has authorized, up to like $1.2 billion worth of Bitcoin to be sold at some point in the future. And then today he announces that he sold just 200 million of it. So basically now everyone's going to be sitting on the sidelines thinking, okay, so there's another like 5-6 more of these to come. Markets hate uncertainty. We've learned this time and time again. Markets hate uncertainty, and having this uncertainty overhang the market is just it's super annoying. My kind of take on all this is like, I can't wait for the drama just to be behind us. Like he's completely over financial engineered all of this. Like the same thing happens every cycle. Like the 2008 global financial crash that happened, like a lot of that, the big catalyst of that was like these over financial engineered mortgage-backed securities. Like the housing bubble wasn't enough. Like housing prices were going up. Everyone was making money from the housing bubble. Everyone thought it could never end. So what do people do? Well, they over financial engineer things, and they introduce leverage. And that's basically what happened with these mortgage-backed securities. They thought the party was never going to stop, so they just threw a bunch, like go down the risk curve, give mortgages to riskier and riskier clients, and then they can't sell this debt, so they package it up into these mortgage-backed securities, throw like maybe some like A+ bonds in there to make it average out the risk, and make it look less risky, and then sell these securities to people. And then all of this unwinds and causes the 2008 financial crash. Like this over financial engineering is just, I guess, the staple of what happens every cycle. And now Michael Saylor has fallen into this trap. He should have just held Bitcoin, and not over financial engineered all these different derivatives and like preferred shares and all this stuff that's now paying dividends. Just a mess. Like I said, it's like the Saylor show going on right now. Everyone's just paying way too much attention to this. I hope that we can get past this drama soon. I guess that's a lot of negativity, so I'll sprinkle in a little bit of positive hope here. Like he does have 2.55 billion in USD reserves now, which is pretty good. I think that gives him like two years, something like that, of dividend coverage for these preferred shares. That's okay. But I guess there's still a little bit of overhang left, where he has this authorization for 1.25 or whatever it is billion worth of Bitcoin that they're authorized to sell. He only sold 200 million of it. So hopefully, I hope in the background he can just get it done. Remove the uncertainty from the markets. Sell the Bitcoin, build up your USD reserves, announce that, okay, this is it. Like there's no more selling. We have enough dividend coverage to last the rest of this bear market. Everything's gonna be fine. And then go back to normal, and there's like no more Bitcoin that needs to be sold. Something like, we just need some sort of like confidence in the market again, some confidence to remove this uncertainty. So yeah, hopefully we can get that behind us here soon. I just can't believe like his strategy here, again, no pun intended, has been just brutal. Anyways, congrats, Michael Saylor. Hope you can figure this out. In other news, has everybody been paying attention to what's going on with ANSEM? Basically, this is just diverted. Like, here, let me pull this up. Like, basically, this whole ANSEM situation now has kind of divulged that. I don't know if that's the right word. Basically, it's like turned into this everyone begging him for airdrops at this point. Like, if you my Twitter now is unfortunately just like my feed is just covered with all these people begging for airdrops from ANSEM. And then he figures out that, like, okay, a majority of these people are just like farming him. Like, I think I seen one example of some guy like ANSEM saying that he wants to like build up this community of people and like help the average person. Great like thoughts around all this. He wants to onboard more people to crypto and wants to use ANSEM to do that. That's great. I think the initiative is great. But then like he's airdropping people. Like this one guy, I was asking him for $30,000 so that he could go on like some European vacation with his buddies, and he just airdropped $30,000 to him. Like, okay. I'm not sure how that helps anybody, but good on you, I guess. I think if you look at ANSEM's wallet right now, he's holding like $200 million worth of this ANSEM token, which is absolutely wild. I mean, how these markets work and like with liquidity and LPing and stuff like that, I think last I checked, there's like no more than like, I don't know, like maybe $5 million worth of like liquidity like to actually sell into. So if he actually tried to sell $200 million worth of tokens, maybe he would get like, I don't know, a few $1,000,000 out of it. But then he would just absolutely crash the token and it would be done. I guess this is the risk with all meme coins. There's no like intrinsic value. There's no like utility behind them or anything like that. I do respect his initiative of trying to onboard more people to crypto and on chain. Definitely that's a good thing. And I've talked about this in the past and I tweeted about it. Like, I think it's good that there's a little bit of like spark back in the on-chain world and in the trenches and bringing a little bit of attention back to on-chain. That part of it is good. We definitely want more people onboarding people to crypto, but if the downside of this and the risk is that, okay, now if you're onboarding people specifically to this ANSEM token, and this ANSEM token is at like $300 million or something like that right now, like there's literally projects like Pendle, for example. Pendle is like a DeFi protocol on like a money market on Ethereum. It's got $92 billion worth of trading volume on this protocol, over $1 billion of total value locked right now. And the ANSEM token is currently valued higher than Pendle, or around the same valuation, which is absolutely like crazy. It doesn't make any sense. So the risk here is that you onboard these people to crypto rails and you get them to, like, basically what ANSEM's doing is encouraging people to onboard and like buy ANSEM tokens. So you're buying in at a $300 million valuation. So a lot of these new people who have never experienced crypto before are like buying this token. Maybe it goes up like 10, 20% from here. Like, who knows where the top is? Like maybe they overtake Pump Fund and get an even higher valuation. Maybe it goes to $1 billion. Who knows? Like, you never know. You can never like properly estimate people's like greed in these things. But let's say, like, for this example, that it goes up to like 3x from here, and then it crashes 99%, because this is what happens with meme coins. You're never going to sustain that sort of crazy valuation when there's like legitimate protocols at similar valuations. So all these people who have now onboarded, maybe they get like a little bit of a gain, but they're probably not going to sell the very top because nobody ever does. And then this thing crashes 95, 99%. And that's their first experience in crypto, is watching a thing go up a little bit and then crash 99% and they lose all their money. I don't know. That's scary. You don't want that to be people's first experience in crypto. Yeah, I guess that's my take on ANSEM right now. Again, just to kind of wrap it up, like here's another tweet that I did. What's crazy is in 2017 is like the price action that you're seeing in ANSEM right now was like the norm in the bull market in 2017. Basically every altcoin was pumping like this, just to like unrealistic, like crazy valuations. And this is what the nice thing is, that this is what gets attention and this is what brings people into crypto. But the downside of this is that this is people's like first experience. On average, like retail is usually like the last ones to come in. There's usually insiders and other people, like the smart money, they say, that buy in first, and then retail is kind of like the exit liquidity. Unfortunately, this is how all markets go. This is the unfortunate reality. And hopefully we retain some of these people that come onto crypto rails, but the reality is that a lot of people are going to be upset when it does ultimately crash, and going to have like a bad first time experience. So anyways, I hope we can do more than just onboard these people on chain. We can actually like do a little bit of education around what crypto is, like what the benefits of like crypto technology is, the benefits of decentralization, and how the underlying technology is ultimately very good for humanity, very good for the financial future of the world. It's just a lot of people never go further than buying one or two tokens, and not actually exploring what the technology can do. So yeah, I mean, I hope I can do my part in helping educate more people on the technology. That's one of the reasons why I wanted to start this live stream, start this podcast, is to help the new people that are being onboarded, helping onboard people, but also help like really educate people on this technology and how you can actually use it to, as the name implies, escape the permanent underclass that's coming. So my take in general on meme coins is that like treat them like lottery tickets, basically. Most lotteries, if you buy a lottery, you have to expect that you're not going to win anything from it. You have to expect that that ticket's going to be worth $0, but maybe you get lucky. Maybe you make some money off it, and then you can rotate that money into something that actually has some intrinsic value, and start to play around on chain, start to play like, if you do get lucky enough to make some money off meme coins, like play around with different DeFi protocols, play around with other things on chain, get to know the technology. I think that's the best way to learn crypto, is to play around with it. You're going to lose some money along the way, but count that as like your tuition. You always have to pay a tuition when you want to learn things. So I hope that we onboard some people through this meme coin hype. But I hope that a lot of them can, just try to play around with actual technology, with different DeFi protocols, different wallets, and onboard for the long term, not just for this meme coin hype. Because the reality is that just in finance in general, only about 10% of traders are profitable over the long term. 90% of traders lose money. Everybody hears this kind of headline, 80 to 90% of traders lose money. It's the reality. You can make a little bit of money over the short term if you're trading short term, but it's not the norm. And if I had to guess, meme coins are probably even worse. It's probably like 1 to 5% maybe make money off this. Like 95%, probably 95% or more are losing money on meme coins. So yeah, just be careful out there. That's all I have to say on that. In other news, I mean, if someone has any other experience, get into the chat, tell me about it. But yeah, there's a lot of stuff happening in crypto right now. Another big thing that's been happening over the past like week here is this whole debate. So Eric Voorhees, for those that don't know, he's the founder of Venice, which is an amazing app that's built in the crypto space here, kind of powered by crypto rails, but it also has this equity side. Now, this has been a debate in the space for many, many years. Like I said, I came into the space back in like late 2016 and went full-time all in on crypto in 2017. And there were very few altcoins back then in 2017. One of the biggest ones was XRP. And so this debate has been going on since that time, basically. Back in 2017, there was a lot of debate around this also because Ripple, the company behind XRP, also has Ripple equity. And XRP, the token, there's still to this day a lot of ambiguity around like the value accrual of XRP versus the equity in Ripple, and this like the misaligned incentives that go along with that. So this debate has now sparked back up because of Venice and VVV. They just raised $65 million in a Series A, which was led by Dragonfly Capital, who are notorious crypto investors. They do token investments and they do equity investments. I think in general VCs are good. I don't understand why they get a lot of hate. They do a lot for investing into protocols and trying to push crypto as a narrative. Like there's A16Z, also Dragonfly Capital, Paradigm, a bunch of different VCs in the space that help promote this technology and help bring it to the world. But I guess the real debate is that, well, it goes back to this whole equity divide, which I talk about often, which is kind of the core thesis of what I'm doing with this live stream, is around this growing divide in the world. And people in crypto, especially the crypto natives like myself, I just like very much disagree with how the private markets work in general, how the average person doesn't get access to these early private investments. So the great thing about crypto is that you do get like a little bit of like better access to the average person for some earlier stage investments. The Venice token is a good example. Like VVV does give you some sort of exposure to Venice, the project. Now, this is where this whole debate comes from, is like the average person can't buy Venice equity. You have to be an accredited investor if you want Venice equity. So how is that value accrual going to work? This is like the big debate, is like how much of so Venice grows to become like it's now valued in the billions of dollars. But if it keeps on growing, maybe one day it's worth hundreds of billions of dollars. And how much of that value is going to accrue back to the token versus how much of that value is going to accrue to the equity. I think that Eric has set it up in the best way possible. Like if there ever was going to be a token equity split for a project, I think he set it up in a very smart way. He stated on many podcasts that his goal is to eventually burn like as much of the VV token as possible, and this is done through revenue. So they have been like collecting quite a bit of revenue. They're a huge revenue producing company and a great example for the rest of crypto in my in my opinion. They have these like Venice Pro subscriptions. They collect revenue from that, and that revenue goes to burn the VVV token. So I think he set this up in a pretty smart way. I think ideally over the long term, like it would be nice for everything to be tokenized. Like all equity should be tokenized. There should be like no split between tokens and equity. There shouldn't be this divide. But like for now, like I feel for Eric because it's tough because if he wants Venice now to scale to billions of users like ChatGPT or any other big consumer apps, like you have to like dump capital into this in order to scale this. So what are his options? Well, he can like dump the VVV token to raise that capital that he needs to scale the operations, or he can do some sort of a split where he sells equity. So I think he's doing the best that he can. The unfortunate part about all this is that you do have to put a little bit of trust in him and his word, that and the company in general, like because the company, the equity side of things, is the one that actually governs this and governs decisions around like how much of the token is going to be burned from revenue and that sort of stuff. So there's a little bit of trust involved. This is why I'm saying like over the long term, it would be nice if everything is done on chain, including governance. But in order for a new startup to move fast, you also need a little bit of centralization at the start. And in order to like make decisions fast, like update the product, move fast, and like create a consumer app that can keep up with like other big companies like ChatGPT, like Anthropic, OpenAI, I guess. Because imagine like Anthropic or OpenAI had to scale to billions of users from revenue alone. It would be impossible. Like someone would overtake them. The only way to scale in this kind of new modern era is to dump huge amounts of capital to scale fast. And yeah, so I feel for Eric. I think he's trying to find the best split that he can for the times that we live in. And I think he's done a pretty good job of it. So, because like basically how, I think he broke it down here. Let me just see if I can find it. Well, I can't find the exact split, but well, Hasib, he's one of the guys from Dragonfly Capital. He broke it down here pretty good. But so basically what's happening is like Dragonfly, who's one of the main lead investors in the equity, they also bought, I think, I don't know the exact amount, but they also bought the token. So not only did they get equity, they also got like a good amount of the token plus basically a grant, like a right to buy more tokens in the future at a preset price, which is also good for the company because it's basically like an OTC deal, over the counter, for those that don't know, which means that like in the future, if they need to raise more money, these equity shareholders also have the right to purchase another, like, I think it works out to like $65 million worth of tokens at a preset price, which means that like Venice will just basically hand these tokens over to them. It never needs to go through the open market. You don't need to like dump these tokens on the open market and against retail holders. It just goes directly to them, and they get this cash back, like another $65 million in order to scale further, which is pretty good because they're going to need more capital if they're going to scale this into a giant consumer app that's going to like onboard billions of users hopefully one day. So anyways, that's my take on this whole thing. There's a giant debate going on. Like Hoffman from Bankless is in there. And Haseeb is obviously, as one of the main equity shareholders, he's defending it. But yeah, I mean, just to wrap this up, I think the main outstanding thing right now here, Eric kind of broke it down here. I feel like the outcome here will be dependent on how quickly Venice scales revenue to buy and burn and new user acquisition and infra build out. The alignment ratio of equity holders and token holders. Yes, like I think that's kind of the summary here. Is like the only way that Eric can kind of build confidence in this model is to like say what he. I mean, is to follow through with what he said he's going to do, and use a good chunk of this revenue to buy the VVV token and burn it. I think if he follows through with that, I think this whole debate will kind of at least go to the sidelines again, and everyone will have a lot of confidence in Venice, because the main thing here is that you need to scale. Like you need to keep up in this modern era. You need to scale to like billions of users. You're going to need cash to do that. So like I said, I think he's found like a decent balance here. Eventually over the long term, I hope all of this can be done on chain, including governance, but we don't have governance figured out in crypto yet. The whole DAO model just has been, like, in my opinion, like a pretty big failure. We haven't figured out how to do decentralized governance at scale, especially for big projects that want to move fast and scale things to like millions, billions of users. So there needs to be a little bit of centralization up front, which turns into decentralization over time. And let's see how this all plays out. But there's a lot of opinions out there. That's kind of mine at this moment. Speaking of decentralization at scale, Ethereum is now in the limelight a bit again, because Vitalik has been talking about how Ethereum is going to be going through a few major upgrades again over the coming years. And I think that Ethereum has, I mean, they've been the model of like finding decentralization over time at scale. They're the best example that we have in crypto today of decentralized governance and decentralization at scale. And you see, like, one of the biggest criticisms against Ethereum is that they move too slow. And I think that's, again, back to this whole thing about decentralization and governance at scale. It's very slow moving. And when you have a startup, if you want to compete with centralized startups that have only equity, you have to move fast. And anyways, I think that one thing that Ethereum has done incredibly well, though, is stay true to its like kind of core values, and like very much stuck to decentralization at scale. And now they've got this new kind of roadmap. Basically, I'm not going to go through all this. It's super technical, super complex, but kind of some of the main highlights here are, like, over the next 3 to 5 years, basically, how this roadmap will play out is there's a lot of emphasis on privacy, having privacy no longer as an afterthought. I think this is very, very important. I think this is key. I think that the average consumer, the average person, doesn't want all of their financial transactions to be just like in public. Like, you want to, if people are going to use crypto and use blockchain at scale for all their everyday transactions, like, there has to be like a bit of privacy. I think privacy, my personal opinion, privacy should be a human right. And I think we need more privacy preserving blockchains in the space. So I'm glad that Ethereum is going to take that into consideration and make that an emphasis in the roadmap. Because if they don't do it, other blockchains are kind of going to eat that up, because privacy is super important for individual freedom. Another thing that they're focusing on is quantum safety. This is going to be a ramped up debate over the next coming years here, because I don't know if you guys have seen what's happening with like Google DeepMind, Google has another, I'm not sure, is it DeepMind or another section of their company? Basically, they're working, like, they're one of the leaders on quantum, and the latest news in quantum is that like we're basically going to have like blockchain breaking quantum computers probably by like 2030, which is coming up very, very fast. Like we're just a few years away now from having quantum computers that are able to break some of these like algorithms that we use in crypto for wallets. So this is going to be a ramping up debate, and blockchains that take care of this quantum safety right now and do the upgrades necessary in order to be safe from this shift that's happening are gonna eat up all the attention. Another thing that's actually holding back Bitcoin right now is their lack of speed when it comes to upgrades. Like it's very, very hard to upgrade Bitcoin, which is a good thing, and in this case also a little bit of a bad thing, because there's a lot of old Bitcoin wallets, like Satoshi's wallet, for example, that once these quantum computers come around, these quantum computers are going to be able to break the cryptography for Satoshi's wallet and be able to steal his funds. So there's a lot of debates happening in the Bitcoin space right now about how to protect against this. But the one thing that Bitcoin has not been good at is pushing upgrades in a timely manner. So this is also something that is scaring a lot of traditional finance and a lot of like big capital allocators, is they don't know to allocate to like Bitcoin right now or any blockchain unless they're prioritizing this quantum safety, because like once these quantum computers come around, like the estimate is 2030, it's gonna break like almost all the cryptography that we have right now. So this needs to be prioritized. So it's good to see Ethereum prioritizing that. And then there's other stuff in here about like changing to a more dynamic state. Very, very technical stuff. Like I said, the bad thing about decentralization at scale is this whole roadmap, this upgrade roadmap for lean Ethereum, I think they're calling it, is probably going to take place over the next 3 to 5 years. So I hope they get the priorities right. Like quantum is probably one of the first things that they should be prioritizing, and I would say privacy also, because that's going to be more and more of a debate in the near future as our privacy gets stripped away in the real world. It's becoming a lot bigger issue, and I think that in order for blockchains to reach scale, there has to be like privacy by default. Individual people, but also like businesses, are never going to put all their transactions on chain if it's not more private, for competitive reasons. Like you don't want to just like be showing all your competitors what you're doing, but also just for general privacy. So yeah, the one thing that Ethereum has done incredibly well though is through all of this, which has been incredibly impressive, Ethereum has had zero downtime. This was a very cool tweet. One sec, I need some coffee. So yeah, I mean, one of Ethereum's most impressive feats over the years is how they've been able to scale and go through all these upgrades and never have any outages or downtime. Like for for comparison's sake, Solana's had 6 outages over the past 5 years. Arbitrum 3, Base 3, just like last week or 2 weeks ago. Base had 2 outages where people couldn't access their funds for like up to an hour or something like that. This sort of stuff is basically unacceptable if we want to like onboard the entire financial world to crypto rails. There can't be any downtime. So it's been super impressive what Ethereum has accomplished. Like Ethereum is like, we've gone through many major upgrades, and there's been basically 0 hiccups and 0 outages. So yeah, props to Ethereum and all the core developers for accomplishing this. And yeah, hopefully we can keep this up. I hope that we can roll out these kind of major upgrades with a little bit of speed. But yeah, at the same time, we can't compromise the security of people's funds and people's access to those funds. So another cool thing that I don't think most people realize is that, like, if you look at DeFi Llama, which is a great source for all things crypto, the vast majority of all capital in crypto is still on Ethereum. $40 billion worth of DeFi TVL on Ethereum. And if you count Base and Arbitrum, because those are also, plus like a bunch of other L2s are mixed up in here, which are also Ethereum, just layer 2s on top of Ethereum. Ethereum dominance is actually closer to like, I don't know, I'd say like 65, maybe even 70%. Like a vast majority of all capital is on Ethereum. Super impressive. But that said, like, other blockchains are like growing in adoption very quick. Hyperliquid, everyone knows, is growing. BSC has a lot of activity. That's Binance's chain. Solana, obviously, everything happening with meme coins. Most of that is taking place on Solana and Pump Fun. And Base has had the most, I would say, most impressive growth over the past couple of years. Like, Base went from 0 to like 4 billion in TVL here, 6% of all activity. Very fast. Like, what's it been, like 1 or 2 years that they've grown that fast? So yeah, very impressive what Base has done. I mean, it's a whole other subject of like what's happening on Pump Fun and Solana right now, like with all these meme coins. Everyone's chasing these meme coins, and now people are trying to like get meme coins going on Base also. My specific take around all of that is that Base should just stick to what it's good to. Like, Base has done a very good job. It's grown up very fast because it's been like a very quality blockchain for like quality projects. Of course, there are the odd like meme coins and stuff like that with very little or 0 utility, but Base has basically been the home of like quality projects. So I hope it can kind of keep that identity, where quality projects want to launch on top of like Base and on top of Ethereum in general. Arbitrum has also done a very good job of attracting like quality projects, like Robinhood Chain, which we talked about last week. Robinhood Chain just launched on top of Arbitrum, which is also Ethereum. That's huge. That's going to be very big for real world adoption because Robinhood has millions and millions of users. So if they can start to bring that whole Robinhood app on chain, and you can do like everything that you can do in the Robinhood app right now, but it's all done on chain, that will be very big for real world adoption, traditional finance, like moving on chain. So yeah, great to see. So props to everyone in the Ethereum space right now for helping onboard the world. What else we got? I mean, I want to talk about like robots because there's a lot of stuff happening with robotics, but maybe I'll save that for another live stream here. Yeah, I think that's like all the major stuff that's been happening in the space right now. Yeah, we've got a guest coming on this week, so we're going to talk a little bit about Virtual's ecosystem, the base ecosystem specifically, and we've got like some more guests lined up for the coming weeks here. So stay tuned for that. Starting to line up some pretty cool guests. So yeah, make sure you follow my X on X here. Follow EPU Live. Follow on X. Follow my own X on, so you can kind of follow these live streams in real time. Hit the notification bell if you want to, because I got a lot of stuff coming out. Really appreciate you guys. Yeah, we'll see you mid this week. We should have a guest coming on for a live stream here. That'll be an exciting one. So yeah, stay tuned, get the notification bell going. Follow, subscribe on YouTube also. Would really appreciate that. Yeah, we'll see you guys soon.